trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up
Sign up for the newsletter, let us help you grow. 5:30. Let's get at it. Did you do your cold plunge today? My household is wide awake. Wide freaking awake. Let's get at this. I don't expect anybody to join me live, but hit the thumbs up button. Hit the thumbs up button. I do not expect anybody to join me live, and I have been having problems with Trendspider for some reason, but let's go over some stuff. The paid portion today will be savings buckets. 3 buckets of savings. It's kind of more of a fire thing, but I will be looking at that. If you had one stock to buy before they announce earnings tonight on Wednesday, February 26th, what would the stock be? We'll take a look at that. Pure Storage. I asked Perplexity, how has Pure Storage reacted to earnings in the past? Well, pretty damn good. Marrow, we're going to go over. IONQ will go over. Snowflake will go over. CRM will go over. Morning, Olga. It is early. Welcome to this world. Axon. Open with. Let me see. I do have to go to this. Let's go to. This is one of the things that you can do. Is you can go to see all, and then type in AXON, which is a one of the ones. And this was a paid newsletter. Sorry if that one made some noise. But there you go. We're going to show that one because I had called that one out, and it's up 16%. Why did Zeta's... Let's go to Perplexity. We'll use this one. Why is Zeta down after earnings last night? We'll talk about that one because that's an alpha pick, and it was in the chat, and it finally did some analysis. This is an education. Oh, stop. We're going to get out of there. We're going to quit Safari. Quit Safari. I didn't do it correctly. Open with Google Chrome. This is a great video from Ross about day trading and risk management. We'll look at that. And is Costco a winner? And by the way, I'm starting early, but I think there's enough here. Let me see. And there was one as well that I wanted to look at. Is this QQQ drops more than 5%? And yeah, below its 50-day moving average. So we'll put this one too. Is this it? Here's the top 10. We'll put that in. Let's see. Consumers are worried about the market. We'll talk about that one. There was an Instagram post. This particular one. And that's it. 10-year yield. So, because the 10-year has been dropping, and it's not a good thing, just so you know. The dip in Bitcoin was labeled. I mean, it was there. It was there. It was there. I own Bitcoin. You should own Bitcoin. And because let's call the degenerates out. I mean, let's see if Seeking Alpha has something. I do need to do a Seeking Alpha. Because I'm used to logging in over here. Let's look at GameStop. Yeah. Okay, we'll do this one. Wah wah and we'll do that article instead of this. This was a great Barry Ritholtz. He's saying, hey, if you can't take 5%, 10% drop, you get rid of your news flow. He said, because you should stay in the market, and the closer you get to retirement, the harder that is. But we talked about the February, the second half of February, and this particular newsletter. Let's see. Let's go down here. Crocs. This is a newsletter that was, I posted it, Ryan. Now in the second half of February, why? Maybe it's earnings hangover since we've had huge run-ups of big stocks. Well, that's one of the things. Now, Supermicro is going crazy. I think this one runs. Workday. We go back and watch yesterday's thing about Workday. And Steve Kress, I have to find this. Let me see. It was, I think, here. Yeah. There it is. Okay. We're going to go back here. And we'll guide through there. Okay. So I'm going to record this just so everyone's aware. And if you're listening to this later, the reason I have to do this early is I'm traveling on Friday. And I got to take the dogs to the vet at 8:30. And it probably is going to be quick. I may come back on and do something live, but I wanted to make sure that I got this recorded and done. So it is now 5:45. I don't think the morning stuff has morning earnings haven't started yet. But the futures are up. The futures are doing really, really well. Kind of means nothing. So let's start this off. I got 7 people in here and 6 thumbs up. So it's the diehards. It's the diehards. I appreciate everybody being here. I probably should post something about me being on early for people in different time zones who can't normally join. You know what? Why don't I do that? Let's go and do the go live and do get shareable link. Let's go to Twitter. I'm up early. YouTube. So join me now. There we go. We'll put it on Substack. Substack.home. We'll do a note. You know what? We'll put it in the chat. Start a thread. Paywall off. Okay, and we're gonna get out of there. I think we've got enough. Okay. Good morning. I'm going to talk in very low tones, even though my household is completely awake. It is 5:30 a.m. This is the Daily Stock Pick live broadcast at 5:30 a.m. Everybody knows I'm traveling next week. I still need to put out the schedule, but I'm traveling, so I have an 8:30 vet appointment to try and get the dog some shots. To try and get them to board because we've got to go out of town. I don't have a pet sitter, blah, blah, blah. But there's a lot to go over. Again, it's NVIDIA earnings day. If you're not as excited as I am, you're just not geeked up enough. This market, we're going to go over everything. Steve Kress posted something about alpha picks in a comment that I just want to point out to everybody, and we'll start with that. We're going to go over workday because I said yesterday, hey, this one looks like it. Remember, we had the bullish engulfing candle yesterday. If you want, go back and listen to that show. And I said this one might be good to look at. Well, it's probably going to get a cross up on the MACD, and it's going to get an entry into the 4-hour algorithm. So I think it's good. SMC filed their long-awaited report. Is that a good thing? Well, it's up 20-something%. Where's that one going? We're going to go over seasonality because it's pretty clear what's going on right now and should you stay in. If you're nervous about your portfolio, it might just be because you listen to doomsayers and you know, not just myself, but Barry Ritholtz, who, legendary guy on Wall Street, said the same thing. Mag 7 chart, we'll look at that one. Calling all degenerates, Bitcoin is crashing, and you know who's buying? Ryan Coleman in GameStop. We'll look at some stuff like that. We'll go over an education play where Ross from Warrior Trading actually shows you how to use confirmation. Zeta on earnings. We're going to look at Axon on earnings. Tonight, NVIDIA, Salesforce, Snowflake, IONQ, Mara, PSTG, and I asked Perplexity, if you had to play one earnings tonight, which one would it be? We're going to go over all of that. Let's look at the Qs. Now, first, I'm going to show you the comment from Steve Kress. So he addresses, if you are an Alpha Picks member, go over to Alpha Picks, and then you click on this brace for turbulence and scroll down to the bottom. He goes over 6 ones that you want to look at and kind of things. But I wanted to point out his comment here because down at the bottom, I truly appreciate all the thoughtful comments and loyal followers of AlphaPix who took the time to read this article. My goal was to highlight the challenges. As a quant strategist for decades, I've observed a reoccurring pattern in the performance of high-quality quant stocks ahead of market turmoil. Much like Richter scale surging before an earthquake, stocks with strong fundamentals often experience notable price action before periods of rising volatility and market pullbacks. The cycle has repeated itself countless times over the years, and in my view, the current environment is shaping up as a textbook case. Investors' behavior is largely being driven by fear. For weeks, we've seen a rotation out of stocks with strong momentum and excellent fundamentals. Unfortunately, for some of our newer Alpha Picks members, the shift has coincided with their entry into the market. In recent days, the trend has accelerated with CNN Fear and Greed Index dropping to extreme fear, its second lowest in the past 52 weeks. Despite this broad market rotation into safe haven stocks, the underlying fundamentals of Alpha Picks hold strong. Out of 37 stocks in the Alpha Pick portfolio, 25 just reported earnings, with 20 beating analyst expectations and only 3 slightly missing. Yet just in 4 weeks, 15 stocks are down double digits, with 8 declining between 15 and 42%. Notably, 6 of these stocks exceeded earnings expectations while 2 narrowly missed. These sharp declines are largely sentiment driven rather than reflection of deteriorating fundamentals. While I don't have a crystal ball to predict how long fear and uncertainty will dominate the market, history has shown that when fear subsides, investors inevitably return to stocks with strong fundamentals, and those stocks tend to surge. This pattern has been consistent throughout my 35-year career. Alpha Picks focuses on stocks with strong growth, value, profitability, upward analyst revisions, and long-term momentum. These core attributes remain intact. He's basically going over what you should be feeling as an Alpha Pick subscriber. And it doesn't look good. Honest to God, it doesn't look good. The return in the last month has been bad. Short term, it's still a very stretched valuation on this, but they continue to provide great support. You can see right here, portfolio return 152% versus 58% during the same time period, the S&P. It's a long-term buy and hold portfolio. But he has been a quant master for years. I trust him. I'm not saying you should trust him. You should do your own research. I am staying in the portfolio. I am staying guided by the portfolio, and all of the stocks in there I own. All of the stocks in there I own. Okay, I just wanted to make sure everybody saw that comment. It is key. It's not just me saying, hey, stay in the market. It's Steve. So what am I going to start with today? I'm going to pat myself on the back as a freaking genius. Because if you listen to yesterday's podcast, and again, not everybody listens every day, but what did we do? We went into Trendspider and we said, okay, I want to do a bullish scan. And I went up into the upper right here and I looked at the daily bullish engulfing candles in the S&P 500. And essentially, a scanning service is temporarily not available. Check out status for more details. It's not available right now, but again, it's 5:30 in the morning. They're probably doing some updates and things. But we went in there. We found Workday. And what did we find on Workday? We found out that Workday was a stock with a bullish engulfing candle on the daily. And we said, well, what does that tell us? It tells us that there's a bullish trend reversal in this stock. And on the 4-hour, we said, well, the 4-hour algorithm, an internal error has occurred. Performance chart 74% versus 35%. The algorithm had you out. And I said, I don't know this for a fact, but maybe the algorithm will tell us it's got a good, a good reversal. Well, what did we see yesterday? We saw Workday kill it on earnings. And in pre-market, it's up 11% to 285. The algorithm didn't get you in yesterday. It most likely will get you in today with a gap up. So what should you do? Well, if you take a look at a long-term chart of this, you can see the gap up to 291. Where are you trading in pre-market? 287. So my guess is that we get above that. Do we get above this double top right here? Probably. Those earnings were good. Do we go above 300? Maybe. Nobody knows for sure. Just like Steve, I don't have a crystal ball, but the average price target 296. And if we go to FinViz, let's just go over to FinViz because let's see if people are taking up their estimates here. February 19th initiated, no price target there. February 19th, Morgan Stanley took their price target down to 275. They look foolish. Deutsche Bank on January 8th moved it up to 300. So you can see the target price from the most recent because AlphaPay or Seeking Alpha doesn't update their stuff as much as FinViz. 310. So do you want Workday? Do you want to find that kind of stuff? That's how you use Trendspider. Go back and watch yesterday's. I'm just going to pat myself on the back. So I thought it was good. I did not take that trade. Full disclosure, I was busy yesterday. I did not take that trade, but I like Workday. It's on the watch list. And you can look back on it. It's been on the watch list for a while. I think D-Man brought it up. I think D-Man even has it. But SMCI, this is another one. I didn't think it was worth the risk throughout the day. If we look at this stock, this was crazy. I want to show you a 5-minute chart of yesterday on SMCI. And the reason I want to show you this 5-minute chart is we had no strength whatsoever. Nothing yesterday. This is yesterday where you gap down from 51.50 to 51, and you had no strength whatsoever. Nothing. That's yesterday. Look at the past few days on this. And remember, yesterday was the filing day. So let's turn on the after hours. And boom, they waited till the last minute to absolutely put in their report. And they put it in. And then what do? They basically blame it on Ernst & Young. Stated concerns and subsequent resignation, we were unable to timely file our annual report. It was not audited. The special committee did not believe the resignation of Ernst & Young or the conclusions reached by Ernst & Young were supported by the facts. That special committee is one person. So I don't know what happens, but this one is up 20%, 25% in pre-market, 25%. And you can see it even gapped up this morning at 4 a.m. Again, it's right now 6 a.m. 6 a.m. The stock is trading at 56. Would I buy this one? Well, it actually becomes interesting at this point. If the NASDAQ doesn't delist them, and again, I don't know what happens. You can go and ask Perplexity what happens. But right now, the algorithm has you in at 31. It didn't get you out. That's what's crazy. I saw this turnover on the MACD and I said, you know what? It's got to come out. But if you look at this weekly, we touched the 200-day. And again, we're going to go over this in a little bit. But the 200-day is a key level on whatever chart you look at, whether it's weekly, whether it's daily, whether it's 4 hour, a 200-day moving average is a very good indication. And what did you do? You touched it. Your MACD is well down below the oscillator. You've started up. And this one has momentum. Now, I'm not going to, it doesn't fit my risk profile, but I do believe it's trading at 56. I think you've got 70 in this. I think you have 70 in this. Honest to God, I think you've got 70 in this. Because when we take a look at this, you've got on the 4 hour, you have the golden cross of the 50-day up on the 200-day. So I wouldn't go balls deep on this one. I wouldn't do that until we have some type of resolution, because right now it's just a filing. It's not like the NASDAQ has said, oh, okay, we're not going to delist you. It's just a filing. And I'm not even sure if it was audited. I didn't dig deep into this one. If you own this stock, I would urge you, go into and research this one. But again, if you want that one, let's talk about the 10-year, because I published this on 2/14, so 14 days ago, the middle of February. Ryan Dietrich, and I told you before, you are here. Doesn't happen to be good to be aware, just to be aware of, hey, you are here. This is the second half of February from 1950 to 2024, and it was going to be tough. And you can see the returns. You are here. That was February 14th. Okay? What did he post yesterday? This should help the odds we finish green today. But we happen after a new all-time high and then 4 consecutive red days. Near-term weakish turn, but a year out, things are a tad better than my normal take. This is not a non-event. That's essentially what this is. A closer look at weakness after new all-time highs, S&P performance after an all-time high, and then 4 red days in a row from 1990 to current. You can see as you go out 12 months, your average return, 9.2%, your median, 11.6%. So the seasonal weakness is good. I would absolutely be buying this dip. I haven't bought the dip. I am absolutely going to buy this dip. I do think that it's good. But I want you to be aware of some things. Okay? I want you to be aware that this is at Barry Ritholtz. And Barry Ritholtz, he goes over here. If you're nervous about your portfolio, the closer to retirement you are, the more nervous you should be as it goes down 10 or 15%. If you're not close to retirement, don't worry about it. And if you're nervous, he said it's your news flow. Because the reality of this market is, and everybody's pointing this out, the reality of a VOO, okay, on a long-term basis, you can see on the 4 hour, it's come down to its 200-day. If we look at the weekly here, it hasn't come down to its 200-day. You're not even at your 50-day, which would be 517, and it's trading at 549. So right now, I would say if you're nervous, it's probably your news flow. Watch this Instagram post. It's a good one. And if you're not nervous, you're probably part of the degenerate crew. Okay? You're probably part of the degenerate crew, because this one, GameStop, here's another call to convert its cash into Bitcoin. That's it. I mean, this is crazy. This is calling all degenerates. I do want to go over real quick before we get into Bitcoin. I mean, by the way, Bitcoin crash, it was clear. This was January 27th. Jim Cramer said, you should own Bitcoin. Bitcoin is great. Have it in your portfolio. It's down 18% since then. I mean, the sign was clear. Now, I want to look at a couple of charts. The first chart that I want to look at is MAG7. MAGS is the ETF. It's not good. It's not good. This has broken its 200-day. Has it broken its 200-day in the past 22 months since it has been? Yeah. It has a couple of times on the 4-hour. Now, the 4-hour algorithm makes you 113% versus 109% if you buy and hold. The 4-hour algorithm has you out. Does that mean you get out of all your Mag 7 stocks? Probably not. I mean, the reality of Mag 7, this ETF, it's equal weighted. It has only been out for 22 months, and you see a straight up line. Okay? This weakness that you're seeing, in my mind, is just, it's Amazon being weak. It's Tesla being weak. It's NVIDIA not reaching all-time highs anymore. That's where you're at. So it's a little bit stretched. But if you look at the 4-hour, again, you broke the 200-day. Do you want to start getting in? When the algorithm tells you to get in, you get in. Now, I think the market scanner, let's see, 200 day. Let's see. I do have stocks under their weekly 200-day. Let me see if scanners are available. It was scanning. There we go. It's going to look for it, but I think it's unavailable right now. It's just early, and I think Trendspider is doing some maintenance or something. But I want you to pull up a scan. You can find this in FinViz. You can find anywhere. Find a scan of stocks that are trading under their 200-day on a weekly, on a daily, whatever time frame you want. But go and find stocks that are trading under their 200-day. You can go and scan these easily in Trendspider. It's kind of stuck right now. We're going to just reload that one and reload up the 4-hour algorithm. Let's look at that. But yeah, scanning is currently unavailable. So right now we're going to go back to the core investment. We're going to look at MAGX. Yeah, degenerates, we're calling you out. Crypto, it's in a weak state. Now, remember how I said, and this was back in, you can go and Google it, but it was based on this Instagram post, and it was from the compound, and basically Michael asked if you, this expert, I forget his name, but he said, hey, if you had one piece of information to know at the end of the year, this year, that was in your pocket to know where the stock market would end, what would it be? And he said it's the 10-year. Okay? He said it's the 10-year. Now, Mohamed Alarian, and just like that, the yield on the 10-year bond is trading below 4.3, down 50 basis points in just over a month. This is part of the concern. This is why most participants are afraid, is because if we go over here and we go to market data and we go to the bond section and we look at the U.S. Treasury for the 10-year, let's look at how it's doing. This is the last month. You're seeing it decline. If it gets to 3%, if the bond yield is at 3%, right now it's 4.32, so we still have a large amount to go. But remember, it's down 0.5% over the last month. Okay? The high was 4.8. We've touched 4.8 a couple of times. 4.6 back here in April of last year. You touched 4.8 in January, and then you started to decline. Now, I'm not a bond expert, so I will not, absolutely not, spout off like, oh my God, this is horrible. Go and watch this clip. He outlines it perfectly. I'll put it in the newsletter. It's great. It's great. And if he's worried about it, I'm keeping an eye on it. Am I getting out of the market because of it? No. But as we crawl towards 3%. Again, most bond experts are telling you if you end the year at 3%, there is a problem. And that's what I'm keeping an eye on. I'm not rushing out of the market. I'm not worried about it right now for my 10 to 15 year timeline. But in 1 year, it gets my attention for this year. But again, I still say you buy the dip. You buy the dip. Consumers right now, and I'll read this little clip that I had. Notably, consumers are getting more pessimistic about the future of the stock market. This is from yesterday's consumer study or something. The Conference Board data showed that only 46.8% of consumers expect stock prices to increase over the year ahead, the smallest share since April 2024. Where was that bond rate at 4.6? Down from 54% in January. Folks not feeling good about the market. Consumers' expectations for stock prices to move higher in the next year fell in February by the most since March of 2020, Kevin Gordon. March of 2020 was COVID. Okay? Renaissance Macro Research highlighted how the consumer confidence report has appeared to regain significance for market participants. And again, data moved us down yesterday. Data moved us down. Go and look at it. Okay? The tech-heavy QQQ falls below its 50-day for the first time in 3 weeks. QQQ is where my portfolio is guided by. And QQQ, if you look at it daily, it's below its 50-day. It's below its 50-day. When was the last time? September. What happened this was January. We shot back up. You're in a range. This is the daily. Look at this range. I mean, this trading range right here. Until we get to the bottom of that trading range, I don't think I'm too worried. I want to buy more down here. Now, when you break this one, that's when it's time to maybe stop and maybe you go back down to the 200-day, but it will take a lot to get down there. Find stocks that are trading under their 200-day, and if they have positive momentum or positive earnings, positive kind of guidance, again, buy them. It's on sale. The tech-heavy QQQ ETF falls. You can see QQQ has a market value of $328 billion, delivers exposure to some of the biggest technology names. Apple, NVIDIA, and Microsoft are the biggest. Despite tech's recent weakness, it is worth noting that the Invesco QQQ is only down 3.9% from its all-time high. All-time high. It's 102 holdings. And if you want to save some money because it's a long-term hold, buy QQQM. Okay? Drops more than 5%. 10 worst performing stocks inside the QQQ yesterday. You got MicroStrategy down 10%, AppLovin down 8%, Tesla down 8%, Intuitive Surgical down 4%, CrowdStrike down 4%. I own CrowdStrike. I will be buying more. Marvell down 4%, Palantir down 4%, MongoDB, Intel, DoorDash. Okay, find stocks that are beaten down. If you like the stock, go and buy it. Just make sure you have an elevator pitch as to why you like the stock, or just buy an ETF. One or the other. Costco showing incredible relative strength. Relative strength is an indicator on Trendspider. And you can see right there, it's booming in a market that's going down. And Costco at $1,055, it's super expensive. But if that one's showing relative strength in a place where, if we go and look at Costco, it's a hold in the quant. And the reason is valuation. 58 times forward earnings and growth of 5%, not in my wheelhouse, not something I necessarily want to look at. Oh, why is Trendspider effing up right there? There we go. The algorithm got you out with a 12% gain, and it's continued up. Are we going to go for another one? Maybe. But weekly, you're still stretched. Not crazy. It's just hanging on to its highs. Costco and Walmart, in my mind, Walmart at this point is a better buy than Costco. Walmart, the algorithm has you out, but it's going to probably rebound back to 104. It's a nice steady growth. Is it expensive? Yeah, it's expensive, but it is what it is. So is Costco going to lead us back? Now, I want to show you this one. This is a pop quiz. This is from Ross. FMTO is one that he traded yesterday. And he shows you, it was the leading gainer in the market. And he shows you why he trades on 1 minute candles. Honestly, you take his learnings from 1 minute candlesticks and you trade it on a weekly, same thing. Same thing. It's no different. Charts are charts. A 1 minute chart reacts faster than a weekly chart, significantly faster. A 5 minute chart will react faster than a weekly chart. Just understand charts. Okay, that is a great education video. It's all of like 30 seconds long. And if you want more, again, he's Warrior Trading on YouTube. He provides so much free information. Don't feel like you have to take his course unless you want to trade on a 1 minute candle, which I don't. I haven't taken his course, but I know all of his fundamental stuff. And I like it. He uses MACD. He uses those indicators. He uses momentum. He looks for flag patterns. He does a lot. I don't do all of that stuff. I'm very basic, but when I was day trading, and if I wanted to day trade, Warrior Trading and Ross is the guy. I would watch his videos every day. I wouldn't take his courses, but I would watch his videos every day. Now, earnings. An alpha pick, Zeta, which I had called out. Yesterday, I had called out Zeta. And I said, you know, Zeta. Oh, come on, Trendspider. We're going to have to log back in. They're doing some work on it, I know, so they're logging me out. I'm going to stop recording. Oh, okay, you let her out. What is going on? I stopped recording. I got to restart recording. Oofa. 6:14. There we go. What? Oh. Trendspider. Log in. I feel naked without this. Honest to God. I don't have Trendspider. I feel absolutely naked. Morning, Angelo. Morning, Josh. Do you think the market depends on NVIDIA? Absolutely. The market will, if NVIDIA says, you know what, 2026, we might only grow by 70% instead of 90%, you're going to see the market taken down by 5%. I mean, that's the game that we're playing right now. Is NVIDIA is the entire market. Oh, come on, Trendspider. Something went wrong while loading. A lot went wrong while loading. I've been using Perplexity a lot, by the way. Come on, Trendspider. Something went wrong. Let me message Rasan. 6:16 a.m. Let's see. Where did Google? Everything operational. That's what it says. I don't know if this is the noisy neighbor problems or what. This is very strange. I've never had this. 4 hour. Failed to save your workspace. Messages about Okay. There we go. Let's see if we can scan. Yeah, we can scan. Let me see if I can do it here. Bullish. Daily bullish engulfing candle. Yeah, we got scans back. So, let's see. We got scans back. But strategies are not back. You have not created any alerts. That's not right. Huh. It keeps logging me out. Why is this? Huh. Yeah. You can say a bit quirky. I've been writing them. So I've had problems the past 2 days with Trendspider. And full disclosure, Rusan, who's their developer, I don't get special treatment, by the way, just so everyone's aware. I am a customer just like you guys. I mean, I think they know me by now, but it's because I chat with them so often, not because I have a podcast or I refer people over. But there we go. Log in. Let's see. There we go. And Rusan did tell me to delete my cookies, which, yeah. And that's what's happening. Okay, I'm glad. Yeah. So Rusan told me here's what it is. And this may be something for you guys. By the way, my audience and they page says all is well. Okay. Yeah, we're having some problems here. Clearly. Yeah, it keeps popping me out for some reason. There we go. Okay. I seem to be back. There we go. Maybe it was just Walmart. And now, yeah. So, seasonality data not available. Yeah, they got a problem. I don't have seasonality data. Maybe they restarted something. I mean, I'm just guessing. Rusan told me my problem, just so you're aware. The theory on what was happening to me the other day when I had some problems and the paid members, I was going over some charts and it wasn't reloading, and similar to that, what just happened. But what happened with me, their theory on it is what's called a noisy neighbor problem, where they have going through a lot, and these are cached. I think they cache some of these things. Yeah, see, now I've got more problems. So Trendspider. Latest. So I don't see people complaining about stuff. Huh. Let's go back to Trendspider. Your session has expired. Refreshing page in 5 seconds. What? Okay. Shit, if I delete my cookies. There we go. Let's see. You know, I've had Trendspider for 5 years, and I think the past 3 days has been the only problem that I've ever had with the damn service. Honest to God, it's weird. Let me see. You know what? I'm gonna try. Let's see. Oh. And you know what? In Safari, I can't even get in. There's definitely some issues. I might have to come back and record the rest of this. Let's see, let's close that down. And it's telling me to log in. There's some issues. Yeah, we're working to remedy that. Okay, there we go. 620 is not available for some customers. There we go. Interesting. Claim it back. Oh, list of strategies temporarily not available. They're working on it. The good news is they're working on it. Seasonality's back. I can't record the podcast like this. I think they may have been overwhelmed with free trials. So, Scott, just so you know, Ruslan told me this is a different problem than I was having, but he said what fixes the problems a lot is just clearing your cache. Not out of logging out of other devices, because it only allows you to log in on one device. It actually removes the login from the other device, so that two people can't use the software at the same time. That's essentially what it is. QQQ should be loaded up on mine. Yeah, cookies. Well, if I go in and let me see, delete browsing data. Yes, Mark. It was a mutual leaving. I don't think they announced who's going to be doing the videos next, but I've been with Trendspider for long enough that there was a person before Jason called Jake, That breakup was not good. That was pretty hostile. And Jake's videos are still on Trendspider's site. And Jason is pretty big on Twitter with his charts, but I never got the story about what happened. And we're back. I don't know. Should I be excited or should I be skeptical? But Jason is leaving. I think he announced it. Let's see. Krutsky. I think he changed. Yeah, he changed his thing. Final day at Trendspider. A big thank you to Dan Ushman and everybody. Yeah. Jason's just a good animal. I mean, just a great guy. But Jason's great. I've talked to him about coming on the podcast too. I told him that fucker needs to start a Substack and needs to start some strategies and start building some stuff. And I don't know what his next step is, but I need to get back to him and just talk to him about stuff. Let's see, 4 hour. I don't think back testing. There we go. There's the 4 hour. That seems correct now. Okay. I think we're back. So let's look up one that I know isn't cached. Is Zeta. And maybe we're not back. Yeah, he's good because what he does is he looks at the calculations, and he's got an open enough mind to wade through all of the indicators, and he knows all of that stuff about indicators and everything that we all kind of take for granted. That let me go in and look at this stuff. He's just got it in his mind, and he's like, oh. And he did this one time for me, and I think I released the video. I don't remember. But he and I did a video together, and he's like, "Hey, let's build an Apple strategy." And I was like, "Really?" And he's like, "Yeah, let's do it." And because he knew it was my thing and my largest thing, and I said, "Okay, let's build it." And he went in there and he just tweaked my 4 hour, and he tweaked it so that it back tested better. I didn't keep it. Because I felt it didn't give me, while it worked for Apple, I didn't feel like it gave me enough for Amazon and for Microsoft and stuff like that. Yeah. Equibeast. Here's the thing, Equibeast. Time in the market beats timing the market. What has stopped you? If you're like 15 years old and you're just getting into the market, I would say start buying VOO, start buying QQQ, start buying those ETFs until you have enough money that you have an emergency fund. Do not invest money that you can't lose. Like, make sure you have a 6-month emergency fund, but absolutely you should be buying. You know, if your time frame is 1 week, maybe it's not time to buy. If your time frame is 10 to 20 years, which as a new investor, I would assume it is, why wouldn't you buy right now? And then the question is, okay, what do I buy? Well, find a stock that is a good company with good earnings, with good management and good products. So look around your house. What device are you on right now? If it's a PC, buy Dell. Maybe you want to buy NVIDIA for the chips because it's got an NVIDIA chip in it. Maybe it has an Intel chip in it and you love Intel for some ungodly known reason. Yeah, just start buying. I mean, and here's the thing, Equibeast. If you have a 15-year time frame, let's go back. Here, I'm going to pull up VOO, which is just the S&P 500. That is super, super simple. And we're going to look at a monthly candlestick. Okay. And what's 15 years before? Let's see. That's 2010. 2010 right here. Were you unhappy if you bought at 103 in 2010? And then in 2011, a year later, you were at 103? Well, a year later, you might have been upset that you didn't get out there and then get back in. Timing it isn't going to be your, trust me, as a new investor, you ain't going to time things well whatsoever. You have to learn these things. And so, but then again, if you bought 103 here, you're pretty happy that you're up 549 right now in 15 years. Or were you happy if you bought here at 249 in December 2018? When you said, well, I'm going to buy the dip. And then all of a sudden during COVID, you get down to 200 and you bought at 250, 257 in December 2018. Maybe you bought in January 2018 and you bought at 263 and then you get down to 200 here. Maybe you're just upset. Maybe it's not the right thing. But, then again, time frame, 15 years. I think anytime during that 15-year period, I'd have been happy buying. Oh, and now I can't get in again. Log in. And now, yep. I knew I shouldn't hop on here. So, and if you're 29, it's a great time to get invested. I mean, do it today. That's the thing. Time in the market beats timing the market. So, give me one. Okay. If you're logged in here, EquiBeast, and you're thinking about what would be the first thing you would buy, and then I'm going to tell you it's a mistake. Because I just told you what the first thing you should buy is. I'm having some issues. Trendspider status. For some customers. Oh. What is a 504 gateway timeout? Oh. Interesting. Interesting. Let's launch. Okay. You are significantly risky. Significantly risky. I mean, if you're okay with that, tell me what the earnings of ARLP were in the last quarter. Tell me what Microsoft's PE is. Tell me what Palantir's PE is versus Microsoft. Yeah. Here's the thing. EquiBeast. That's not $200 a month for SPY. It's not SYP. It's SPY. S&P. If you're nervous about it and you're not don't buy it. The S&P 500 is very simple. But your Ripple, SMCI is way too risky For somebody new, SMCI is way too risky. That's just my opinion. But here's the thing. I can't guide you. I am not a financial analyst. I am just telling you that in my experience at 29 years old, you need some risk. But I think as a new investor with $7,000, and if the $7,000 is all you have, that distribution that you just put in, NVIDIA, Palantir, SPY, XRP, Microsoft, OXL, it's just too risky. I would move it. Yeah, here's the, you can't, you're not going to time these things. I mean, just as a new investor, you're just not going to time. You may win a ton of it, but you're just not going to time it right. Let me see. Launch. I may have to record this later. Yeah, I think I'm going to record the earnings portion later. List of strategies temporarily available. Yeah, we're still having problems. We still got major issues. Seeking alpha for once is working perfectly fine. A stock climb. AMC is climbing. Oh, it's just up a little bit. I was going to say, no freaking way. Yeah. Invest risky. I mean, that's the thing. If I were you, learn charts, learn, how to read a candlestick, how to know when stocks are trading under or below, above their 200-day. I would learn fundamentals, find out what those companies are making in earnings. Like OXL, just full disclosure, it's not making money. It's not making money. You're betting on the future. You don't mind that, but have a small position in it. NVIDIA, it's not going to double from here. It just can't. It's a $3.5 trillion market cap. It's not going to 8 trillion. It just can't. And if you're nervous and you're losing sleep over something, get the hell out. Put it into VOO. Put it into QQQ. QQQ, make no mistake. I mean, QQQ, when you buy this, I mean, you look at the holdings, every $100 of QQQ, you're buying $9.48 of Apple. You're buying $8.10 of NVIDIA. You're buying $7.63 of Microsoft. You're buying $5.68. That's how you manage a portfolio. ETFs are basically a portfolio for you. So make no mistake, you are protecting yourself by buying smaller sizes. Do you think that, a portfolio manager is going to have 50% of his portfolio in Apple like I do? Hell no. But I feel safe with that. But I have close to 40 years of investing experience. So I've been comfortable with it. I know what the risk is. If Apple loses 50%, all of a sudden my ass is going back to work. Not true, but launch. I'm getting it again. Okay. My ass is going to go record some other stuff because this isn't working. I'm going to go record some other stuff. I'm going to do the earnings podcast maybe in a little bit. But right now, my charts and I feel naked as hell. I ain't trading. I mean, honest to God, this is the problem I have when Trendspider goes down. I'm a mess. I can't do shit. So, okay, I will be back later. I may go live again, but if you have any questions, hit me up. Everything's at Linktree. And Equibeast, you'll be fine. Just if you're nervous about it, pull it out. I mean, if you're nervous, A, you either have too much in the market versus what you have. B, I can't. At 20 years old, I was throwing shit in there that I shouldn't have been throwing in there. I was perfectly happy. I was brave as fuck. But I knew, at 20, that I had my whole lifetime ahead of me. So I wasn't nervous. Everybody has different risk tolerances. I would just so happen to be at a high. I always thought throughout my life, my risk tolerance on a scale from 1 to 10 was like a 5 or a 6. Because I saw some of my friends making tons of freaking money on options and doing, trading stocks and that I didn't even know about. And they went like balls deep into stuff. And sometimes it worked, sometimes it didn't. I, on the other hand, was a very kind of disciplined investor who I didn't always know what I was investing in, but I knew enough. And but you got time, your risk tolerance is your own. If you're nervous, your portfolio is just out of whack. That's the reality of it. If you're nervous, your portfolio is out of whack. So sign up for the newsletter, EquiBeast. I mean, I'll put in there where you should be nervous and stuff. It's not going to save you from your nerves. Nobody is going to calm you from your nerves. That's the thing. Your portfolio is your portfolio. No matter what somebody tells you, if they are wrong and all of a sudden you lose 50% of your portfolio, that's your own damn fault. Nobody is going to calm you down. If you make 50% and you feel like a king, it doesn't mean you're a genius. The market humbles everybody. I've been humbled many times in the market. But again, my wins greatly outweigh my my losses. So that's where you have to get. Okay, I'm going to come back. I'm going to hop off here, and I'm going to come back later. So hit the alert button. Thank you for the 17 thumbs up to the 20 people in here. But hit the alert button. I am going to be back later. But I got the majority of this recorded, so that was one of the points. Okay. See you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.